Hey guys, thought I'd do a quick stream. Been a few weeks and quite a lot going on at the moment, so thought we'll do a little Q&A, see if anyone's wondering sort of what I've been up to. I sort of mentioned in a couple of videos that I'm looking to move broker, so I'm just sort of double checking, seeing if there's anything I've missed on these before. At the moment, looking like moving to IG. Also, sort of thinking about longer term potential side hustle type income. Been looking into sort of things like BlockFi, sort of staking cryptocurrency, maybe getting a little bit of income from that, just sort of as a potential extra stream of income rather than just stocks and dividends and that type of thing. So yeah, if you want to sort of chat about any of that, chat about stocks, crypto, whatever you fancy, yeah, drop a comment. So I'm thinking, I've been looking at sort of a few different brokers, mainly sort of these five and possibly sort of Free Trade and Vanguard. But yeah, I kind of sort of narrowed it down to IG, Free Trade and Vanguard, but sort of leaning more towards IG. Just seem to have better fees. Well, not sort of better fees than the other two as such, because they're both sort of free, but better fees than the other people with more options than Free Trade and certainly Vanguard. But Vanguard sort of takes the stock picking and sort of the thought out of it, really. But yeah, kind of thinking IG at the moment. Don't know if anybody else is with them. Hello guys. Hello Ali. Does Hargreaves charge £65 a transaction? Not quite. You may be sort of referring to the FX fee. So they charge, for individual stocks, they charge £11.95 for sort of low amounts. And then they also charge an FX fee, which Trading 212 have just introduced. Trading 212 do 0.15% on anything that isn't in pounds, which some people have sort of got a bit worked up about without realising Hargreaves Lansdown's fee is 1%. And sort of other brokers that people use, Interactive Investor, sort of, you know, shout about they're a flat fee platform, but they charge 1.5%. So, yeah. So you may be sort of combining $11.95 for a trade plus, you know, depending on how much you're investing, say £50 in FX fee. Evening, Josh. Thoughts on N Global? Oh yeah, Josh. Yes, if you missed the start, I'm not moving away from 212. I just kind of would feel more comfortable with two brokers, sort of in the end game. I mean, I'm up to sort of what are we up to? Nearly 200,000 on Trading 212. Obviously, the sort of longer term goal portfolio with all the crypto and everything is about 600k. I don't really want 600k on Trading 212. So I was looking to sort of split that between 2 different brokers, and I'm looking to sort of move away from Hargreaves, and so I have this fund with Hargreaves, and I have the Jupiter Gold and Silver Fund with iWeb, and I'm looking to probably leave both, mainly due to the fees. And so I can't move those, even if I wanted to, I can't move those to Trading 212 without selling the whole lot into cash and then sort of waiting however long it takes, maybe a month, while they sort of transfer the cash over. So I'd have £60,000 in cash, and don't really know what can happen in the markets in a month. So not really comfortable having that much in cash. So I need to do an in-specie transfer. So basically means you need to find an investment that the one you're looking to move from and the one you're looking to move to both have. So you can transfer it intact. So that was sort of part of the reason for a second broker as well. Ali, what's your view on N Global? That is not one I've heard. N Global Corporation. It's a NASDAQ, and it's a penny stock, I presume, 100 million. Not normally my cup of tea, but what are we talking about? Engineering and automation services, primarily to the energy sector in the US. So a penny stock, energy type stock. Not going to have any analysts sort of viewing it. A huge amount of revenue growth for a very small company. Not a huge amount of profit growth either. Generally sort of think with these penny stocks, unless they've been around a very long time and it's sort of they just happen to be small, would sort of expect more growth, to be honest. But yeah, maybe not the best person to ask about these sort of small stocks. It's not really my area, to be honest. Josh, have you ever made a big withdrawal from 212? I haven't withdrawn anything from 212 actually. Sort of been reading on Discord today about sort of people's multiple transactions, lots and lots of little transactions. Don't really know sort of how that would work with mine. Because yeah, I've made sort of smaller number of large deposits, to be honest. I don't sort of tend to make too many small deposits. Some of sort of £500 and £1,000, but I guess if I start making withdrawals, it would test the theory that they're sort of refunding your deposits, because yeah, most of mine are sort of very round figures of sort of generally £500 or £1,000, or when I do the big crypto deposits, sort of 5,000 to 10,000. I can't imagine they would sort of deposit 10,000 in one go into my bank, so I would expect a little bit of turbulence, if you like, if I was withdrawing that sort of money. But no, as of yet, I haven't withdrawn anything. Ali, can you just check if you open a new ISA account this year with Trading 212, do you need to cancel your Hargreaves one? If you've paid into your Hargreaves one this year, you won't be able to open a Trading 212 ISA. Depends whether you've paid into it since April the 6th, I think it is. You could transfer the ISA to 212, but you would need to sell everything in the Hargreaves Lansdowne ISA and then transfer the cash. And then rebuy the stocks within trading 212. So, as I say, that's sort of a bit of a hassle. You'll sort of incur some fees doing that certainly with Hargreaves Lansdowne, and then sort of there's probably a small amount of fees when you rebuy within 212. And you'll be out of the market for sort of potentially up to a month. Could be quicker if it's just cash. But you have to be prepared probably for it to take a month and be in all cash. So, yeah, that's the only reason it'd be sort of something to think about. Westy, hello Westy. What are your thoughts on CFD trading on 212, putting money into the likes of the FTSE 100? With the likelihood of the stock going up long term. You mean a sort of leveraged CFD on the FTSE 100? Not something you see people doing too much, I guess. I mean, I'm not particularly bullish on the FTSE 100, but I can't see it sort of being particularly volatile. So if you mean a leveraged bet on it, then it could go well, I guess. Quite small movements though on FTSE 100. I mean, you pay for the CFD trades because you're sort of borrowing money, so whether you would actually make enough money, in a short amount of time to cover the fees of using CFD, not too sure. Depends on if you are going leveraged, how much you'd be leveraging. I don't know whether people do sort of 5x or 10x leverage on stocks. Ali, can you still buy stocks using that ISA if you have money in there? Yes, you can manage your existing ISA and do whatever you like with the money that's already in there. Not paying but using your previous year's allowance. Yeah, you can do whatever you like sort of within the ISA with the stocks that are already in there. You can sell them, buy new ones, and sort of do whatever you like. It's just depositing new money into it since April the 6th. A little bit awkward with all the rules. You got to bear in mind as well, from what I've seen, no one will actually stop you depositing money. If you tried to sort of deposit into both, they will allow it, but you'll get a nasty letter from HMRC, I would have thought. Yes, so here we are with IG. It looks like. So it's a long, arduous process. So I've had to sell out of my BlackRock Golden General Fund in Hargreaves Lansdowne because it's not available on IG, and so that went through this morning. And I've bought the GDXJ, the VanEck Junior Gold Miners ETF, which you may have noticed in my little ETF distribution that I've shown before here. So starting to get more towards my long-term goal. I just went for the one rather than the split, obviously, just because it's more fees with Hargreaves Lansdowne. IG are a little bit cheaper, so I'll start to sort of split this money up once it's within IG. And on iWeb, I am selling out of the Jupiter gold and silver that I was in Yeah, so selling out of this within IG, and I was looking for sort of a similar fund that was on this and on iWeb and IG, and I couldn't really find anything. So then I thought about just going all in on First Majestic Silver, sort of thinking it's a big position in both, and I realised I would get 1.5% fee, FX fee on iWeb, because they're one of the ones that have the big FX fee. So pay about £500 in fees just for that trade. So I'm thinking at the moment I'll probably go with Polymetal. So buy that, then transfer it over to IG, and then probably sell Polymetal and buy probably the Silver Miners ETF. I'm looking at maybe splitting up, so I'll have the VanEck GDX and the GDXJ for the juniors, and then they do a silver SIL Silver Miners ETF and the equivalent junior Silver Miners ETF. So I might split this down to 1.25% in each, so it's still 5% between them all, but just gives me sort of gold juniors, silver, and silver juniors, because IG have got the whole lot. So it's quite nice. So Ali, you haven't deposited as you're using 212 this year. Yes, so as I say, you can keep your Hargreaves Lansdowne one, and you can open a new trading 212 ISA and have two. That would be fine. Or you can sort of sell your investments within Hargreaves Lansdowne and transfer the cash into 212, and then deposit more money this year into 212 and just have the one there. But it's whether you want to run two at the same time, whether you want to sort of obviously carry on paying fees with Hargreaves. It's sort of the main reason I'm looking to get away. And so something to think about. Josh, anything you're worried about when withdrawing is 212, send it to a card. Hope it's not a ball ache to put your new card on when the old one expires. I sort of seen a lot of people talking about this. Are you not using the bank transfer, sort of either the instant or the main bank transfer now? I guess a lot of my earlier deposits would have been on a debit card, but sort of since they used the instant bank transfer, I would think it would just be sort of straight direct to your bank. Hello, Inkmatic. You're debating on moving your LISA to HL. Yeah, LISAs are a little bit sort of more restricted. I mean, there's only a few people that have them, isn't there? Hargreaves seem sort of one of the best of the bunch, really. Haven't really looked into the LISAs all that much. V Patel, thoughts on IAG? Do I reckon this will recover in the near future? I did hold IAG up until they announced the rights issue. Not all that keen on them, to be honest. I mean, sort of taking a huge amount of debt. Don't really agree with the sort of, going back to, everyone seems to be looking at the pre-COVID share price and sort of thinking it's a magnet, it'll go back there eventually, but they're in a different position now to where they were there. I think even if demand were to go back tomorrow to pre-COVID levels, doesn't mean the share price is going to, because they're obviously they've got to pay off all that debt. It's going to eat into profits. So yeah, I wouldn't see sort of that as potential upside to the pre-COVID share price. And they weren't exactly super profitable before, so yeah, not for me. Josh, use instant bank transfer, but when you first started it was debit card. Yeah, so I'm the same. I was using debit card, and while it was free, so it depends. You might have some iffy sort of transactions with the lots of small amounts just until they exhaust the amounts that you deposited on debit card. But yeah, it's, I guess, something you have to put up with. They may improve it. They're obviously saying they're spending the FX fee money on improving the back end, so maybe that will be one of the things that'll improve over time. Obviously, they're still quite a young sort of broker in terms of being a major broker, even though they've been going sort of 15 years. Westy, any idea what the waiting list is like? No idea. Everyone's been asking this for sort of a little while now. Yeah, it's been going on months. There's no sort of updates from what I can see. You're currently 17, 18 next month, so hoping there's not a backlog of people. I think there probably is a backlog of people, I'm afraid. Obviously, if you want an ISA, it's a little difficult. If you sort of open one up with free trade, sort of wanting to get in, then you're stuck with them for the year. Yeah, kind of feel for you, for the people that aren't in yet. Would it be a good idea for 212 to go public like HL have? I don't know sort of how that would work. I mean, the sort of UK branch, if you like, is more just a branch of the parent company, which is sort of Bulgarian still. I don't know if they could do a UK IPO. I think they are in a funny position though. They've got sort of more, as I understand, more customers than Hargreaves, but a lower total invested amount. But yeah, interesting position to be in. Could potentially do an IPO or a SPAC. We could have a UK company have a SPAC. Inkmatic. I think most of it will be using the open banking method. Seems pretty simple and easy enough with Starling. Yeah, as I say, I would expect less of an issue with deposits that have been on instant bank transfer. Don't know. We'll have to see if sort of anybody has, joined since the bank transfer came into effect and only used that and is then trying to withdraw money. I'm quite optimistic that sort of over time, as they start putting more money into development and sort of growing as a platform, they may sort of iron out these issues. I haven't, to be fair though, withdrawn a whole amount of money from any of these brokers, to be honest. I've kind of deposited on one broker and then moved to another one. Very rarely had to actually withdraw a great deal of money from them. So it'll be new to me as well. V. Patel, do you think Alibaba will get delisted? Not really. I may be sort of overly optimistic about how this is all going to pan out, but I can't see, sort of with the amount of money that's going into some of these ADRs, that they're going to sort of shaft all the US investors. And it seems like Joe Biden is sort of more friendly to the Chinese than Trump was. So I just kind of see two countries are obviously not best friends at the moment, but sort of working things out over time. So yeah, I don't think it would be a huge issue. It'd obviously cause a drop if they were to happen, but I think it's worth the risk, to be honest. That's partly, I would think, why they're a little bit cheaper than some of the US tech companies. So yeah, if that threat goes away, then maybe you see a decent increase on them, and you just got to take that risk. The withdrawing money is a pain when your card expires. Yeah, I've sort of seen this with a few people. You'll get a new card number and that sort of thing. It's something you have to go through with customer services, I guess. Josh, most of my money in stocks and crypto. All of my money is in stocks and crypto, pretty much. I've got $3,000 in cash. That is about it. Not really keen on cash at the moment. Yeah, would rather sort of have it in crypto and stocks, to be honest. I'm a big believer that the inflation figures that come out of the government, sort of all around the world really, are wrong. They're sort of maybe a little bit tinfoil hat, but I think they're kind of rigging the inflation basket, to sort of keep it low. Sort of being in the building industry, see prices going up, see food going up. Yeah, I think the sort of see a lot of people talking about technology, sort of electronics and that sort of thing, how they put a deflationary amount on that. So, your iPhone may have gone up, but because they've added a camera to it, the government sort of say, well, you're getting more for your money now, so they don't add that price into inflation, and maybe sort of even say that they've dropped in price in real terms, even though the price has gone up. So yeah, I think inflation is, well, not just coming, I think it's here, so I don't really want to be in cash at all. It's basically just an emergency fund. 75% cash, though. That is bold. What's a favourite type of investing strategy? Dollar cost averaging, lump sum, fundamental, technical? I guess kind of a mix. I'm kind of dollar cost averaging, sort of just because that's when the money sort of comes available. Sort of investing salary sort of as and when it comes, and investing sort of crypto money when I'm making those sales, investing that into stocks. So I'm kind of dollar cost averaging by default. Where I've done sort of a big sale, I've sort of sold 30,000 of crypto, I do put that all into stocks in lump sum, as soon as possible. I'm not really keen on sort of holding that back and drip feeding it, a few thousand at a time. Kind of sort of think, find some stocks at a good value that I would want to invest in, and hope that I've sort of picked those at a reasonable time, rather than sort of drip feeding it in if I'm potentially wrong. And it's long-term investing, so if I sort of drip feed it over a couple of months and I'm holding for a number of years, then it doesn't really make a great deal of difference. So I just think put it all in, and it sort of generally is proven, I think, over history to beat dollar cost averaging, really, just putting it in one go, unless you are putting it in at the very top of a crash. But I'm sort of quite diversified. I've got a lot in gold and silver and that sort of thing, so quite well hedged if there is a crash, if you like. You hate holding cash. You've got 5 figures and it kills you that your money is losing value faster than you think. You're 17 and you've got 5 figures in cash. I think that's a congratulations. Not sure where where have you got that, but good on you. Yeah, I can feel your pain though, wanting to get that into something other than cash. Josh, if you had to give your 21-year-old self some advice, what would it be? Probably to start investing in stocks earlier. I mean, 21 was about 10 years ago, so that was sort of pretty much the beginning of this current bull market. So I was sort of putting money in. Well, I was saving up at 21. I was saving for a deposit on a house, so I suppose that was worthwhile. But maybe 25, 26, sort of after I moved out, I was really just saving up cash, and that really could have been sort of put better into stocks. Would have seen far greater return, because I only started investing in stocks sort of a couple of years ago. So yeah, it would probably be just to have looked into stocks far earlier. So Jay, you have the trading 212 ISA. I'm wondering what your thoughts are on also opening the Vanguard stocks and shares ISA. Plan is to day trade with 212 and drip feed the Vanguard ISA. I presume you don't mean depositing into both at the same time. Obviously you can't do that. I see what you mean. Maybe I don't know how you would do that. You can transfer cash over from trading 212 to Vanguard, but yeah, you can't put money into sort of continuously put money into both in the same year at least. West, you're a window cleaner who doesn't like to spend a penny. Blimey. 17. Well done as a window cleaner. I mean, I've had my windows cleaned once or twice. It's not a huge payer, it seems, so you really must not like to spend a penny. But 5 figures could be an incredible start if you want to be sort of getting that into stocks and shares and stuff, starting at 17 or 18. Yeah, if you're long term, you could be sort of retired early potentially if that's what you're going after. But yeah, good on you. So yeah, have a look at one of my sort of potential side hustle-y time. I mean, it's not really a side hustle, this is just earning interest. Looking at BlockFi. So obviously I'm selling crypto sort of as we go, and I'm sort of thinking leaving some behind rather than putting it into stocks, and staking some of this onto BlockFi and potentially Swissborg. So BlockFi, sort of how they offer, you can stake Bitcoin and Ether and that sort of thing. I was considering, because I'll probably keep back maybe half a Bitcoin rather than sell the whole lot eventually, and I was sort of considering putting that half a Bitcoin on here just to sort of earn interest on it, but it kind of seems like the tax implications could be a bit complicated. So yeah, I would probably just keep the Bitcoin in my wallet, to be honest. But yeah, certainly sort of keeping a reasonable sum of just cash on here, earning sort of 8.6%. You get 9.3% on Tether. Pretty good. Just trying to sort of find out more and more, as much as I can really, about the safety of these platforms. But haven't seen anything sort of particularly bad yet. I mean, BlockFi, sort of from what I've read, started pretty much during the bull market in 2017, and they've went through the whole bear market till 2018 to even the beginning of 2020, and never lost any any funds due to defaults. So yeah, I guess that's a positive. But yeah, sort of putting, I don't know, maybe £10,000, maybe a bit more on BlockFi and 10,000 on Swissborg. Sort of gives you 10%, nearly 9% in interest. Seems a nice little earner. They have got these sort of premium tiers on Swissborg, which sort of trying to read up on and see if it's worth doing. So you have to stake 2,000 Swissborg tokens. Obviously means getting into a new crypto sort of in semi-retirement, which is a little bit risky. But yeah, let us know if any of you guys are in sort of BlockFi or Swissborg staking. Be interested to see your thoughts. Josh, what industry do you work in? I'll just say construction, rather not sort of go into it too in depth. Westy, business you work for charges quite the premium. Nice. Premium window cleaning service. Hope to retire by 35. Yeah, well, that's certainly possible. I mean, obviously I've sort of had my luck with crypto, but even without that, if I was just doing it with stocks, you know, if you're starting with that sort of money and you can put a reasonable amount in and get reasonable return, then it could certainly be possible by 35. How much did I have at 21? You're at 21.5k. That is a lot for 21. Maybe you're like Westy and you don't spend a penny. At 21, I bought a car at 18, and then I was sort of saving up from there. I'd say maybe similar amount, 21 grand, sort of about 21. I moved out when I was sort of 25, 26. So yeah, probably maybe a little less than that actually, maybe sort of 15 grand. I mean, he's good going. Got to say well done for anyone having that sort of money. I mean, obviously most people your age have got 50p in the bank pretty much. Take it you're not out on the lash every weekend. Or not at the moment. So we've got Josh and Westy, the frugal fellas. And me, of course. Thoughts on global shortages in semiconductors? I'm quite bullish on these companies, to be honest. See a lot of people sort of obviously drawn to AMD because it's easy to sort of identify that they're in the lead in desktop chips, but they're very expensive on valuation. Obviously, I'm in Intel. If you've seen the portfolio, they're behind on sort of consumer desktop chips. Still ahead in laptops. AMD don't even seem to have any sort of hold in laptops, so that's still Intel's game. And data centers, I know in the recent sort of earnings they had a bit of a drop in data center revenue, but yeah, I think with the shortage everyone can make money basically here. And I've got Taiwan Semiconductor as well, which sort of basically seem to be able to sell to anyone. You've got Apple and I think even AMD use them. Everyone just seems to use them. Nvidia. So they're kind of a shoe-in, really. Sort of, I think, cheaper than AMD on valuation, and sort of seriously growing even at their high market cap. So, yeah, very bullish on semiconductors, but not for every company. I think most 21-year-olds have a lot of uni debt. Absolutely, yeah. I was never particularly keen on uni. You prefer the word frugal as well rather than tight. Yeah, it's not a criticism. It's only because I get called tight myself. I like the word frugal. Have I bought S-On yet? What was S-On? Smithson Investment Trust? No. I take it is this sort of a bit like the Fundsmith and Scottish Mortgage and that sort of thing. May have looked at this before. But no, it's not one that I've looked into. Can't remember what the holdings were when we looked at them before. Seems to be sort of reasonable growth. Not super bullish like some of the other funds we're seeing at the moment. Guess they haven't got a huge amount in sort of US tech and that sort of thing. But no, not one that I've bought. You'll ask again in 6 months. Adam, do I have any dividend income goals? I'm kind of sort of going away from dividend income as such, and towards just sort of total return goals. So I'm kind of hoping to get to sort of about 600,000 in total portfolio value, and sort of assuming, say, 3% inflation. Hoping for a 7% total return, so that would give me sort of 4% available to spend, which would be about 24,000 a year, probably less a bit of tax because it won't all be in ISAs. So yeah, but that would be total return rather than just dividends, because there's lots of stocks that I'm sort of invested in now which I like, that only sort of pay maybe 1%, 2% dividends. Obviously, the American ones you lose 15% withholding tax. So, yeah, if I were to say only live off, I know some people want to only live off the dividends, but it just means I would need a much larger total portfolio, which isn't really necessary, I don't think. So, yeah, total return. I mean, when people say, you can earn 7 to 10% in the stock market, they don't mean just from dividends. So there's nothing sort of wrong with when rebalancing, you can sort of take some profit on a stock and use that to spend. If you've made 7% in a year, then you can use 4% of it, whether it be as you spend in the dividends or selling a small amount. Josh, it's a mixture of spending carefully and not going overboard. If you want anything, you'll get it within reason. And you have the silver and sunglasses side hustle. Oh, I've seen your silver. What's the sunglasses? That's interesting. Are you flipping sunglasses? Interesting. The silver certainly seems a very profitable little side hustle. You're not on great money, just expanding the side hustles and shares. Made your first 1,000 on 212. Nice. Very nice. Westy, when did you see your money start making itself large amounts of money? Larger than my construction job's income, perhaps? Well, yeah, so I put in sort of generally about £1,000 a month into stocks. And yeah, probably since Christmas, probably getting to sort of 100,000 in total. This is on the stock side. I mean, Obviously, if you've seen the crypto videos, it's sort of been very lucky, but it makes more sort of in a week than I'm sort of putting in a couple of months, really. But that's generally because we're in the bull market. We've had lots and lots of down times. But yeah, probably in stocks, sort of when I started getting towards sort of 100k, I'd see that move sort of maybe a couple of thousand up in a month, and I'm depositing 1,000. So yeah, then you start to sort of think, yeah, it's going up a fair bit more than I'm putting in. Josh, you buy Oakley sunglasses that are scratched for £30, buy new lenses for £7 and sell for £65. Good God. That is a proper Dell boy. Sounds good money though. New set of lenses for £7 and then sell on eBay, so bit of fees and stuff. You clear £25 a pair maybe? Nice little yeah, nice little sort of little earner. Adam, really interesting, eye-opening answer. Yeah, no problem. As I say, if you want to know any more, just let us know. But yeah, that's kind of my sort of view at the moment. Still sort of working out an ideal sort of split amongst a few sort of revenue streams. Maybe, as I say, sort of stock income, and then maybe a little bit on BlockFi and Swissborg. Put a little bit on there from the crypto. Sort of been looking into matched betting and that sort of thing. Sort of see people making, hundreds of pounds a week. I'd probably be thinking I'd do it on a very fairly small scale, maybe make £100 a month out of that. And yeah, just sort of having, everyone always says, multiple streams of income in case one goes down. But yeah, so that's sort of the ultimate retirement figure, if you like. Kind of thinking I want maybe 25,000 after tax to sort of live reasonably comfortably. Maybe a little bit less if I could pay off mortgage. I've only got quite a small mortgage, to be honest. It's amazing. Yeah, Josh's little side hustle. Always trying to better yourself. Yeah, absolutely. Like you say, if you start to sort of put these side hustles together, if they're consistent and yeah, repeatable, then you sort of think, well, do you need to work full time, after a certain point, or you start to plan, an age that you maybe could go part time. I've kind of been sort of tossing around the idea of talking to the boss about maybe dropping a day a week, or maybe going 3 days a week. But yeah. Westy, you're going to put 500 a month into stocks, and after a couple of years up it to 1,000 a month into an ISA, so it's tax efficient. Yeah, absolutely. I mean, if you can afford that at 18, that's good going. As you say, premium window cleaning. Yeah, a lot of people wouldn't be able to put sort of, well, people your age wouldn't even be putting 500 a month into stocks. So absolutely, if you can do that. What are you thinking of investing in? Are you sort of going the stock picking route, or ETFs? Be interesting to see what sort of a younger person is interested in. Whacking the lot into NASDAQ tech stocks, the FANGs. But yeah. So, still kind of annoyed at the fact that I went with iWeb for a little while. I mean, there isn't a platform fee with iWeb, so it's not too bad. I paid £25 to open the account, but never even. I just sort of looked into the trading fees and platform fees and that sort of thing, and never even looked into the FX fee really. Kind of sort of thought, you know, in retirement I'll be rebalancing sort of these portfolios, and you're just sort of paying £5 a trade to do that. Yeah, this sort of FX fee with all these platforms seems to have been a bit hidden from everyone. A lot of people don't even seem to mention it at all. I looked at Fidelity's ISA. I knew it was expensive, but I was just curious as to, you know, maybe they didn't charge an FX fee being sort of international, and it just says foreign exchange fees apply. It doesn't even say what it is. So got to presume that's sort of 1% or more like the rest. So yeah, I moved to iWeb, or moved part of my Hargreaves ISA to iWeb. Never made a trade at all. It's just the one fund has sat there, the Jupiter Gold and Silver Fund, and now I'm moving it away, having never made a trade. So yeah, bit of a mistake, and it cost you a hell of a lot of money. As I say, if I were to sell that fund and sort of buy a US stock, say, with all that £30,000, then you pay £500 in fees, which they sort of don't make blatantly obvious when you sign up. So we live and learn. As I say, I've only been at this for 2 years. I said, Eek, am I planning to buy more altcoins? What do I think about altcoins going forward? I did have a little dabble. I bought a couple of small altcoins, just sort of with the recent dip. They've actually gone up sort of even in the last few days since I bought them. But yeah, as we sort of get towards if there is a sort of euphoric end to the bull market, I think pretty much everything goes up, and the sort of very small altcoins can sort of rocket up. So I always think can maybe have a little dabble in altcoins as a aside from a reasonable Bitcoin and Ethereum position. I sort of see a lot of people who've got nothing at all, and you know they're putting money into XRP or you know Dogecoin and that sort of thing, and I just don't really agree with that. Obviously, it's up to the person, but yeah, happy with altcoins as part of a larger portfolio, and yeah, if I get sort of spare 500 quid maybe here and there, then yeah, rather than sort of chuck it into stocks where obviously it's not going to particularly move the needle on my ISA and sort of invest account, then yeah, you think, why not chuck it into an altcoin? One of the big wigs at work showed you his portfolio. He got in Argo at 40p. Yeah, a lot of people will have. I mean, there'd be some people who sort of got in at, you know, I think it was 3 pence or something, even just a year ago. So yeah, there'll always be these guys. But yeah, it's whether they sell, whether it sort of crashes in the bear market, they might be still holding on to it, wanting to make more. Whether they can sort of average out. Westy originally looking at ETFs such as EQQQ and VUSD. When you looked at the top holdings, you saw a common pattern, so you looked at Berkshire Hathaway and JP Morgan. That's interesting, yeah. I mean, things like EQQ, obviously you're looking at the FANGs, basically. Depends whether you want to be in those. I wouldn't particularly. That's why I don't even hold an S&P 500 ETF at the moment. just because I'm not keen on those companies, let alone a sort of NASDAQ tracker or anything, which would be pretty much 50% FANGs nearly. But yeah, Berkshire is sort of an interesting one. Obviously, they've got a huge amount of Apple, but then they've got sort of large amount of cash and quite a large amount of sort of value stocks and their owned businesses. So interesting. And I take him in JP Morgan sort of ETFs and that sort of thing. Obviously, I guess they're actively managed, so it's whether you want to go for active managed ones with a fund manager. But they certainly have performed reasonably well before. The JP Morgan emerging markets one seems to have outperformed most sort of passive emerging market funds. Looking at the top stocks in those ETFs and those two banks. Yeah, that's interesting. I suppose, you can maybe look at the sort of, the top holdings in active ETFs maybe, or even just the passive ETFs. That's partly what I've done. Is, you get a lot of sort of inspiration from, top holdings in ETFs. BlackRock, the sort of iShares ones are quite good because they give you the full holdings, not just the top 10. Some platforms, Hargreaves especially, you sort of take like this BlackRock one that I'm in. It's quite difficult to sort of drill down to all of the holdings. They'll give you the top 10 there. I think if you sort of dig further into the research and maybe some of the sort of key features and documents, you can sort of get at it. But yeah, you have to sort of dig quite deep sometimes, whereas BlackRock, the sort of iShares stuff, tend to sort of give you it front and centre, which is quite handy. Ryan, can you explain the difference between ISA account and invest account? The ISA is sort of pretty much the same as the invest account. It's just tax-free, so you don't pay capital gains tax or dividend tax within that ISA. And the only sort of limit is you can put 20,000 a year into it. So yes, generally, I mean, there's a few stocks, some Chinese stocks and that sort of thing, that aren't available in the ISA. But if you're just investing in sort of general stocks, then the sort of general thinking is to max an ISA as much as you can first before sort of moving on to an invest account. Obviously, if you've got a large amount to invest, then you can put up to 20 in there in 1 year, and then if you have more than that, then you can move on to an invest account. But yeah, for most people, there's sort of little need to use an invest account unless you're maxing the ISA first. Do you think gold could top 2K this year? I think 2K is sort of, I mean, I'm bullish on gold. Obviously, if you've seen my allocations, but yeah, I would think 2K is sort of fairly conservative, to be honest. Yeah. Looking at buying the single stocks of the likes of Apple, Tesla, Amazon, yeah, fair enough. So it is mainly FANGs and that sort of thing. The pie says average return of 33%. I would be very wary of the average return that if it's sort of someone like Trading 212 are giving you. It's giving you the last 5 years, which have been sort of incredibly bullish, especially the last year. I wouldn't expect anywhere near that sort of return going forward, especially in sort of people like Apple and Tesla. I mean, a lot of that 33% return will be coming from Tesla alone. Obviously, people like Nvidia have done really well. Apple have done well, but not to the likes of Amazon and Tesla. So, yeah, it's near enough impossible to sort of continuously make 33%. Not wanting to sort of rain on your parade a little, but yeah, I would sort of take the pie returns with a pinch of salt, to be honest. Long-term average of the index is so obviously 7 to 10%. Individual stocks will do better than that. Some will do worse, but yeah, if you're getting 33%, it's not going to be forever. It would normally be a good year for a stock. And well, yes, while I've only been in this sort of a couple of years, but I've done a lot of sort of back testing and looking back into the past on these stocks and sort of seen boom periods and obviously bust periods since sort of the 2000 recession and the 2008 recession. And yeah, you normally get a little bit of sort of euphoric bull market towards the end where everything's rocketing up. And yeah, unless this time is different, it does seem like the last few years have been one of those periods. And you can generally sort of look at the best performing stocks of, say, the last 5 years are often sort of underperformers for the following 5 years, just by their very nature that they've gone up that much. So, you know, obviously Tesla, people have got their $4 trillion price targets and that sort of thing. But I mean, for Apple to grow 33%, you know, they're at, say, 2.3 trillion. I can't remember what they're at. I think it's about 2.3 trillion. So if they did, you know, if they've done that for the last 5 years, say, if they do it for another 5 years, so they're going to be knocking on 10 trillion in 5 years. Just doesn't seem likely. I mean, if you look at Apple's long-term sort of profit, it's kind of been slowing down. So if you have a look somewhere like Macro Trends, that sort of gives you a reasonably long history of sort of their fundamentals, not just the stock price. So you look at revenue, obviously it took a huge jump up in sort of since the 2008 recession. It was a large jump up, but you sort of look, you know, 2015, 230 billion in revenue. 6 years later, nearly 294. It's not a huge jump. That's revenue. I think net profit is even worse. Yeah, so I mean, this is quite flat, you know. So this is, obviously this was sort of a little good period in 2015, but 53 billion in net profit. And they're now sort of, obviously they've just had a good quarter, but in the last year you're sort of looking at 57 billion. So they've grown less than 10% in net profit in 5 years. And I think the stock's up 400%. So yeah, one can't really go up without the other for very long. No raining is yeah, as I say, not sort of not one to rain on your parade as such, but yeah, I would just be wary, to be honest. Have a look into bullion. Yes, Josh will tell you to get into gold and silver. I'm very bullish gold and silver, obviously, but I don't like to sort of make too many recommendations if people are interested in stocks. Sadiq, what's your thoughts on the Bitcoin stock to flow model? Do you think it's really accurate? And is Bitcoin going to follow it? Well, I mean, I was looking at it the other day and it seems to have pretty much come back to it. So, no. Bitcoin stock to flow. Yeah, this is the one I sort of generally use. So obviously you can see the turquoise line is sort of the model price. If we just zoom in to sort of this bull cycle, if you like, yeah, it seems to have captured it pretty well. This sort of recent price action, we just zoom in. So we spent a few months since the turn of the year sort of up and down, but generally above it, and this sort of recent correction has brought us slap bang on the line, and now we've sort of hit a little bit of a rally again. So yeah, the people that I've seen, lots of people who sort of say this is complete garbage, but it just seems to sort of consistently be fairly accurate. So yeah, I'm kind of bullish on this. So we're looking at, you know, August, September time, or sort of mid-August really, at 100,000. To be honest, I don't really need 100,000. I'd be sort of obviously selling a reasonable amount between 70 and sort of 90,000, keeping a little bit back at 100,000. But yeah, if we get there by August, then I'll be a very happy man. But at the moment, we see it be following it pretty well. So yeah, I'm a believer in it. Obviously, it's not gospel, but yeah, it's just another indicator to keep an eye on. Josh, do you think there'll be a commodity super cycle? Yes. Again, I'm sort of kind of a believer in the commodities. Seeing lots of sort of gold and silver predictions of potentially sort of the next 8 years of rises. Not really 100% sure how I would play my gold and silver. Westy, have a look into it. You need to head out. Yeah, see you later. Yeah, good to have you on. Good to chat. Yes, so commodity super cycle. Yeah, seeing sort of lots of sort of charts of 8 years of growing commodities, sort of in precious metals at least, and then I sort of look at my allocation of 5% maybe in precious metals. Even if I change this to gold and silver, it's still only 5%. And then sort of on my individual stocks, I've got obviously Rio Tinto and BHP, say, on the mining, but they're not huge allocations. So yeah, at the moment I'm sort of exposed to a commodity super cycle, but sort of longer term, at the moment I'm not particularly. I've got some sort of things like Archer Daniels is sort of commodity exposure. Deere and Co. I'm not actually in yet, but sort of would be commodity exposure. Yeah, I may want to adjust these percentages and up it a little bit more. As I say, I'm sort of kind of a believer in commodities doing pretty well over the next few years. Maybe not a super cycle, but yeah, I'm not really as exposed as maybe my beliefs would show. First Majestic, not 100% to be honest. It's quite a big position in the the two silver ETFs that I'm looking at, and I'm not all that keen on sort of individual miners, to be honest. I mean, I like sort of Polymetal and Sentiment at the moment, but yeah, I think if I get to the retirement goal, I would be kind of just leaning more towards the funds. So I think the silver, the junior silver miners has got First Majestic at 10.6%. So yeah, that's quite, that's fairly big. That would be sort of my exposure to them, and I would probably sell out of it as an individual stock. And then the ordinary SIL, so the Global X Silver Miners ETF. I think First Majestic is a lower position in that. So you've got Wheaton, Precious Metals, and then Pan American, quite a big one to, you got 11% there to Polymetal anyway, and then First Majestic. So yeah, I think rather than holding these as individual stocks, I would probably just obviously have a reasonable allocation to them in these, and just if I wanted a bit more exposure, then maybe just increase these percentages a little bit in these funds. But yeah, so I think 2 gold and 2 silver funds, maybe worth upping that allocation a little bit for the commodity super cycle. I was sort of thinking of it in terms of gold and silver going up, in the short term, in a crash, and then sort of, I would take profit on that and put it into stocks. But yeah, if we are going to get sort of a longer term move, then might be worth just sort of increasing that maybe to 10%, so I could have 2.5% in each of the gold ones and 2.5% in each of the silver ones, because sort of bullish on the silver ones as well, with sort of industrial demand, the sort of solar demand, and renewable energy and that sort of thing. So both have got different uses. So yeah, that would be the thinking there. So yeah, I think I'll probably leave it there. If anyone else got any final questions, yeah, I shall give it a minute and head off. By August, I'll be a millionaire. Probably, as I say, it may come, but I think I would just be getting out earlier than that. Hopefully, sort of semi-retire. Nice one, Josh. Yeah, see you soon. Okay, guys, I shall head off. Obviously, catch up and do my usual 2 videos at the weekend, and yeah, see how we're fixed then. So yes, I bid you guys farewell. See you soon.